as we're getting in a lot of news. And joining me now to go through some of the key names on Wall Street, Diane King Hall, host of Morning Movers, is here taking a look at Wolfspeed, which was incredible, darling. Then not.
Yes.
Now what?
I mean, now I guess in some ways it could be seen, at least for the day, as a darling, but you put it well there. I mean, it's great perspective because it's exiting bankruptcy, but that obviously doesn't show the full picture. Shares are rallying right now more than 30% at the moment. But again, these are not the old shares for Wolfspeed. It's exited bankruptcy. It's restructured its business. It's wiped out old shares. It's issued new ones. It is under the same ticker, WOLF, excuse me. And here's the thing. It did slash about 70% of its debt. That's a big reduction. That gives it more, essentially, just breathing room here. There's renewed investor confidence in its future, especially when you think of fast-growing markets like EVs, because obviously it supplies some of these chips to the EV space, AI space, clean energy. That's where its silicon carbide chips are in demand. It's prized for energy efficiency by restructuring. Once again, they are cutting their debt load. They're cutting their interest payments by some 60%. That helps it free up some cash to reinvest in growth, right? The management framing this as the start of a, quote, new era for the company. The catch, old shareholders, existing shareholders, they took a big hit. That old stock was canceled. Investors only got a tiny fraction of new shares in exchange for those old shares. Most of that new equity is going to creditors, and often when you have a bankruptcy, that's who's first in line. It's the creditors, then the shareholders, if there's anything left, right? So the debt hold is lighter, and again, old shareholders, you know, getting something but not the same degree to what they had previously. And Wolfspeed still faces some profitability challenges. Analysts are still expecting the company to continue to have some red ink, unlike their rivals like onsemi or NXP. But the stock rally, you can't ignore, it does reflect some optimism about the new road ahead for Wolfspeed. Nicole.
Well, it's amazing how this stock went from $120 down to pennies.
Yeah.
You know, it was such an exciting stock, but today, as you noted, up 30%. Now it's up just 25%. So it's already losing some of the momentum there. Let's get to, now you're looking at a downgrade here for Spotify, right?
And a shakeup in the C-suite here.
There
Two new CEOs at Spotify. Daniel Ek is stepping out of that role after nearly 20 years. He's moving over to executive chairman role. Taking the helm will be a new co-CEO structure with Gustav Soderstrom. He's the Chief Product and Technology Officer, and Alex Nordstrom, the Chief Business Officer. Both have also been co-presidents since 2023, so they've already been running a lot of the company's operations and strategy. It comes at a time of strength for Spotify. Shares have rallied about more. I mean, they've essentially basically more than doubled over the past year. They have seen momentum in terms of the market cap. It's been an outperformer year to date. Spotify has some roughly 700 million users, including almost 300 million of those are paying subscribers. So people are paying up for their Spotify. You saw recently strength in revenue, and they're paying out their artists as well and rights holders. So, you know, they have a good relationship with artists. So the idea for Alex, he focuses on the business. Nordstrom, he focuses on the business, marketing, and the content. Gustav tends to oversee the technology and product innovation here. They've been instrumental in scaling Spotify for more than a decade. And the CEO saying in his statement, essentially, he sees himself moving as more to a coach role instead of the player day-to-day role, Nicole.
Yeah, it's interesting. I mean, look, it's had an incredible run. As you said, what a year, up 85%. A good time for a CEO to step down, sort of at the top of the game.
Yeah.
You know, and the price target that Goldman Sachs has with the neutral rating, I know it's a downgrade, but they have a 770 target, which is still higher than today's price of 707. On Oklo, a downgrade there?
Yeah, this is Bank of America who's downgrading Oklo to neutral from a buy. It's got a new price target of 117. So it's kind of a mixed view because they're straddling the fence here. They're raising their price target. That was up from 92. But it shows that where they see Oklo now is essentially baked into the value. They think investors might be a little too optimistic about the small modular reactor. That's been a big part of the story for Oklo and rival NuScale, right? There's the nuclear story here, that we're going to build more nuclear, need more nuclear clear, but it also takes time to execute on this. And Oklo is still pre-revenue, so Bank of America saying valuations look stretched. The assumption of the deployment and growth are not realistic at this early stage of this type of rollout for Oklo. And, you know, it just trades at a high multiple. I mean, this has been a huge move this year for Oklo.
Diane King Hall, great to see you.
All right, great to be with you.
Spotify, Oklo. Thank you, Diane. We got you covered on all the big names here on Wall Street.